Welcome to Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. As always, everything today is general commentary only. It does not take your personal situation into account. With all of that said, let's get into our first chart. So let's start off with the SP 500, and after a brief consolidation, we're off at a new all-time high, and this has been the fourth consolidation, which has lasted around about 2 weeks since the October low. So we just come back the October low, and you can see these 2 week consolidations which have played out around about 2 weeks. And there's 4 of them, it's being the fourth. And so they've played out over that period from the lows. And each one has had the potential for coming back and retesting this 50-day moving average. So I've got the 50 and the 100-day moving averages on this chart. They've all had the potential of coming back to the 50-day moving average, but none of them have. And it's the persistence and the strength of this trend has just continued. Now, there's lots of speculation around when a correction is going to occur, and we do know that at some point the S&P 500 it will come back and retest the 50-day moving average. It will happen, but of course nobody actually knows when that's going to be. I've thought a pullback towards the averages has been due for a while, and of course that hasn't happened. And but I think the way to handle this type of situation, I think the most appropriate strategy in these situations, and this has been the case for some time now, it's to let profits run. It's not about trying to pick the top. We want to be able to manage our risk, but it's not about trying to pick a top. It's about letting profits run, letting markets move in the direction that they're going when you're positioned and when they're working. And yes, they've come a long way. They've certainly come a long way since that October low, but there's nothing to say they can't go further. So, and this is really what I said back in January. I thought maybe a retest to the averages, but still let those profits run. Don't take profit, because if you do, you cut off the potential of further gains if things continue to extend higher. I think the key in these situations is to be able to manage risk. And for me, that involves using a wide trailing stop. I want to keep upside open, but then have an exit point if a pullback develops that then turns into something larger. So a wide enough trailing stop to see off the week-to-week volatility within a market, but if something larger develops, well, then you have an exit strategy that can get you out of the market. So I'm happy letting profits run, but I'm not enthusiastic about buying the S&P 500 at current levels. I just don't think this is an asymmetric entry point. I've said this previously, and I continue to think it. And I also don't want to chase stocks that have run hard. So if I'm in a stock which has run hard, that's great. But in terms of getting into a stock that has run hard, my preference is probably to leave those alone. I'd prefer to get money into the market by looking for stocks that are breaking out of ranges or rallying off their moving averages. And I'll show you what I mean by that in a moment. Now, if you're getting some value from this, please hit that like button. Helps the channel a lot when you do so. Leave a short comment, hit that subscribe button. It just sends YouTube the messages that what I'm saying helps, and then YouTube will show other people. And if YouTube's showing people, well, then I've got an audience and I can keep making videos. Now let's move over. I want to show you one more thing. Russell 2000. I think the smaller caps offer. I think they're offering an area of potential opportunity. Just looking at the latest price action, the Russell has once again rallied off this 50-day moving average. So again, like the S&P 500, I've got the 50 and the 100-day averages. So just this week, Russell's rallied off that 50-day moving average. Now, this is the fourth time we've seen this type of price behavior since January. So you can see these periods here, 1, 2, 3, and 4. And for me, that's an indicator that there's interest in buying this segment on the market on pullbacks. And I'm also looking at this big basing structure. Now, if you've been watching these videos, we've spoken about this many times previously, but it's just one of those things that just stands out on this chart, this big basing structure. I wouldn't say we have a decisive break to the upside at the moment, but the bulls continue to gain traction. Just this buying of the moving averages. The bulls are currently controlling this situation and gaining traction. The other thing to note is the structure of the price action. And what I mean by that is that it is rising above and it's holding above rising moving averages. And it's being able to sustain itself above those moving averages for the last 4 months. So this is something we haven't seen. To see the Russell maintaining above the rising 50 and 100-day moving averages for 4 months, we've got to go back over to this period during 2020 and 2021. So it's been absent from the price action for some time, the type of structure that we're currently seeing. I like the risk and reward dynamics of the Russell. I think it's got good upside potential from current levels. That doesn't guarantee upside, of course, but I think that potential is there. And as always, though, it comes down to managing risk. We have had several strong months, even in the Russell, much more in the SP500 and the NASDAQ, but we've had several strong months in the Russell. I want to continue playing this from the long side, given that the trend and the momentum is clearly the path of least resistance is upward. But I always want to be selective about what I add to the portfolio, what I add to my portfolio, and I don't want to lose sight of risk. Good upward periods, people tend to become less cautious and greater risk takers. But I think good up periods are the times to really probably become even more conscious of your risk, because at some point we do get those pullbacks. But let profits run whilst things are working. So look, let's leave it there for this week. Hopefully that's been interesting. Hopefully it's been helpful. Look forward to coming back and talking to you next week. Till then, bye for now.